Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome the CEO of Bit Digital, Sam Tabar, back to the program. This is on the heels of a major announcement this week from the team at Bit Digital, and we're very curious to hear more about how this incorporates into the overall strategy. Now, before we get into today's interview, please take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Bit Digital, what you thought about this week's recent vertical integration announcement, and your outlook heading into next year for this stock. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Back by popular demand, we have Sam Tabar, CEO of Bit Digital, on the heels of a major announcement for the company this week. Sam, always a pleasure to have you on the program. Really excited to get into today's conversation. Thanks so much for being here.
Thanks for having me, guys.
Hey, so the first question, I don't think it's going to come as any surprise. Bit Digital just announced a major M&A move, really taking a step into the vertical integration realm in terms of the HPC data center world. You've mentioned or hinted at this a number of times on the program, Sam. Now you guys were able to come through and deliver on that deal.
Yes, thank you. I try to make sure I deliver on things that I put effort in. We announced the acquisition of Enovum Data Centers, which is an owner, operator, and developer of HPC data centers. The purchase price was approximately $46 million US, mostly cash plus rollover of shares to Enovum management, just to keep them aligned. This now vertically integrates BTBT's HPC operations with an existing, fully operational, fully leased Tier 3 data center in the heart of Montreal, a major metropolitan city. And, being in a major metropolitan city is very important. I'll explain that. I'll talk about that in a moment. But, this provides for us a strong diversity of existing and prospective co-location customers, and we have a very solid and firm book of future demand. We have over a dozen existing customers currently now. That doesn't even include our GPU as a service business. So, and we also have a very exciting, strong pipeline of expansion site opportunities. And above all, we experienced a super experienced team that has a proven track record to lead this development process, so we could skip all the learning curve. And look, this enables BTBT to offer new services such as co-location and on-demand computing, which complements our existing GPU offerings. This vertical integration on the HPC side has been a strong priority for us, and we're able to achieve that at a very attractive price. Basically, for a similar ground-up development, we acquired a fully operational 4-megawatt facility and a key time advantage versus greenfield development. We got it now because the opportunity is now, not years from now. And so greenfield development for us didn't make any sense. And yeah, look, like I said, it's a fully leased site. It's already generating several $1 million of EBITDA. So that's a big win.
In terms of the site itself, I mean, are the GPUs coming with the site? If so, what does that look like? And in terms of return on investment, what sort of, in sort of broad strokes, what does that look like as well?
Look, I think we got great value from this deal. Purely accelerating the outcome compared to greenfield development was super important for us. I think you have to take into account the value of getting a platform online versus starting from scratch. Greenfield development of a Tier 3 data center is really, really hard. It's something that we wouldn't necessarily be able to accomplish very well and on time, especially with our current skill set. I don't think Bit Digital knows what we're doing when it comes to building a Tier 3 data center from scratch. And I question whether the other Bitcoin miners, them doing it from scratch, they're going to be going through a very steep learning curve. And we just wanted to bypass all that. We wanted to bypass the painful and expensive learning experiences going through building something from a greenfield development site. The tier 3 data center provides high availability and reliability. It requires multiple power and cooling paths. If there's failures, the systems are automatically switched up to a backup. Have you ever walked through a tier 3 data center? It's very different from a Bitcoin mining operation.
Yeah, no, I can imagine. I mean, fortunate just a couple of weekends ago to go to Boden in the north of Sweden to see Hive's facility, and they have GPUs on one side, and they have Bitcoin miners in the same facility. So, that wasn't tier 3, obviously, but then they're not offering a tier 3 service. So, I mean, are there some, I mean, like yourself and a number of the subscribers or followers to this channel won't really know what tier 3 actually means. I was led to believe it's got to be so good you could if you could eat your breakfast off the floor, it's that clean and the environment's really different from a normal facility.
Yeah, it's like comparing a Lamborghini to a Honda from the 90s. It's very different. Bitcoin mining operations and HPC operations are just apples and oranges. But, look, installing a new revenue stream is extremely important and in the DNA of Bit Digital. Co-location has different economics than GPU cloud. So we're able to evaluate growth opportunities in tandem now with respect to our GPU as a service and our co-location business. We like to have the optionality of using Megawatt we develop for our own GPU business so we could capture even greater margin. We're trying to be in a position where we don't ride the beta and the cycles of the market. I've been saying this for a long time. I'm trying to put Bit Digital in an alpha posture where we win in all seasons. And for Bitcoin to be anywhere close to the margins we're capturing on the HPC side, you'd have to have Bitcoin at double where it is today just to approach the margins. And so, there's no real barrier of entry to get into Bitcoin mining except capital, of which we have plenty. We have no debt. We have over 200 million on our balance sheet. We're working on credit facilities. And credit facilities for the HPC business, which is normal and sane. It is insane to have a credit facility for Bitcoin mining because the underlying commodity is very volatile and you're just not able to model out your future cash flow in order to pay off your debt if you're borrowing money to expand your Bitcoin mining operations. But with respect to HPC, you're able to model out your cash flow, your future cash flows. And so you can match up assets and liabilities very mathematically in a way that we can all go to sleep at night and know that when we wake up the next day, we're making money. And I know exactly how much I'll be making by the penny. You can't say that with Bitcoin mining operations. So when Bitcoin mining does really well, if it gets to like 130, 140,000, then we'll take a look at it again. For us, Bitcoin mining is a very attractive call option. But at the end of the day, I'm a shareholder value maximalist, not a Bitcoin maximalist. And I just want to produce shareholder value regardless of where we are in the cycle of Bitcoin.
In terms of this facility then, which is added to your obviously your business in Iceland, how far does this take you to getting towards your target for the end of the year in terms of I think 100 million was the target you announced earlier in the year, and I think most of that was going to come from your first client, which we'll talk about in a second. But this is something separate to that. How does that get you to that target?
This particular site that we have, without the sites that are being developed in 2025, I think that produces just 1.5 to 2 million in EBITDA for Q4. So that's the contribution with respect to our run rate target. As mentioned in my last earnings call, there is delays on the Blackwells, and our first client is now deliberating between whether they move forward with the Blackwell or the current technology that exists with NVIDIA. And so that's a discussion that's happening currently. If they decide to move forward with, for example, the H200s, which exist today, we'll be seeing a bump in our run rate. Of course, there's a few other prospects that are currently in the pipeline that I can't talk about now, that I'm hoping will be able to be in a position to announce before the end of the year, so we could approach our target.
Excellent. And in terms of, I think one of the peer miners today announced that they just bought a load of the H200s. Are you able to have tested this machine compared to the H100s? And is it something that you think, in the same way that Bitcoin miners look at the latest, most efficient mining rigs, are you in the HPC GPU world looking at the same technology and seeing if that's a good fit for your operations?
I have not tested. My technical team may have tested out the H200s. If that's the question, I haven't. I don't
Yeah,
have.
sorry.
I don't want to make it up, so I can't answer that question in a proper way.
No, that's fair, Sam. Appreciate the transparency. And to me, what I'm most excited about with this is not only do you get that head start on that tier 3 facility, but as you mentioned, you get all the talent, the education, the experience of the team that's already been there and done that, right? And this is a very new and untested industry. So I think that's a key differentiator.
Also 288 megawatts pipeline, of which just under 100 are under LOI. So this is a real pipeline that we're talking about, and we will be financing that over the next couple of years. We're super excited to do that. Just remember, 1 megawatt of HPC is like the equivalent of like 10 megawatts in Bitcoin mining when it comes to revenue. So although the audience may not think, for example, just this one small start of getting 4 megawatts sounds pretty small, it sounds peanuts when it comes to Bitcoin mining, it's actually like 40 megawatts.
Yeah.
Which is one of the reasons why 1 megawatt is much more expensive in HPC than it is versus Bitcoin mining. And on top of that, we're able to get this with an experienced team, with an established pipeline, with 13 customers, pipeline of other customers that are banging on the door to work with us in these data centers that we have currently and we're developing. That's a great deal for us. And lastly, we're able to get it in basically the heart of a major metropolitan city. And when it comes to generative AI and inference AI, you have to be in the city in order to minimize latency. If you're having these HPC data centers that you're building in the middle of nowhere, you're not going to be positioned very well for inference models. And if anybody says otherwise, they're not being truthful.
Fair enough. Yeah, you're totally right. Montreal, that little strip for Canada, I think represents about half of our population in there with Toronto. So a great location for sure, Sam. My question now is a little bit of a step back strategy wise. You've talked about the desire to get this vertical integration added to your portfolio. You've now talked about acquiring the staff, the experience to be able to build these kind of facilities from scratch. Should we as investors be thinking about this as a pivot in strategy? Now from here on out, we're going to be vertically integrated, buying, building, or is this more of a adding kind of variety or diversification to the current mix?
We're not growing our Bitcoin mining business operations, if that's what you're asking. We're putting our growth capital in HPC. That's absolutely for sure. And I won't change my mind about that unless Bitcoin goes up to, and it depends on the hash rate, of course, but if Bitcoin doubles where it's at now, then I'll start reassessing. But until then, when I can capture margins in a precise manner, and I know exactly how much money I'm going to make over the next few years, our growth capital will not go into Bitcoin mining. It will go into HPC. So I just want to be clear on that. But with respect to maybe spinning out a self-mining business, if I would consider that, well, separating the business is something that we said we consider if our valuation continues to go sideways. And I still believe our valuation is not unleashed. It's not proper. I can't really comment specifically on the price of our ticker. I do believe that it's not fairly valued. I think it's far from normalized, despite our HPC business continuing to mature. There's plenty of momentum and it's growing. Separating the digital assets business and the HPC business is probably something that makes a lot of sense eventually, especially given our growth trajectory in the HPC space. However, that eventual separation might unfold. How that separation unfolds will be based on what creates the most shareholder value. That's the most important thing for me. So we'll assess it when the time, and if that time comes. I continue to think that mining and HPC shares overlapping skills and can be complementary. That said, it remains to be seen if that optionality is worth the reduced multiple that investors put on a hybrid business. Long term, it's harder for me to envision growing both businesses in tandem to a large scale. Capital is finite. Eventually, companies will have to prioritize one over the other. You can't straddle both businesses and expect robust growth from each business forever. The math just doesn't work. So the moment you start diverting investments away from mining, you fall behind in the rat race of being the biggest miner. And that's what Bitcoin mining is. It's basically being the biggest miner. And so if you're not going to be the biggest miner, what do you do? And that's something that we had to face. We were not going to be the biggest miner, but we found a different path, provides shareholder value, and we think we caught it really well.
You've certainly done that, Sam. I've just come back from Amsterdam, and I was on a speaker panel discussing the value of mining Bitcoin in Europe. And as one of the three speakers, we were all sort of like scratching our heads at the moment, because really at the moment, it doesn't seem that Europe is a favorable spot to mine Bitcoin. Now, you've got operations in Iceland. I've spoken to other miners that are operating in Norway and Sweden and in Iceland, and they're saying it is challenging at the moment with regards to energy costs and the margins achieved. And this probably aligns to the fact that you're, looking more at the GPU side at the moment, because the Bitcoin price, although it's rallied the last few days, we don't know what the price is going to be next week or next month, never mind next year. Are you finding it a challenge in Iceland, or do you still think there's reasonable margins in the Bitcoin mining space there? And is an opportunity to utilize that power in Iceland towards GPU, or do you have sufficient power to operate your GPU and your growth in GPU in Iceland itself?
I'll be straight. I've never heard any gripes from politicians or banks or people in the capital markets when we do our HPC business. But when we do our Bitcoin mining operations, politicians and many other stakeholders have an issue. So that's always been super annoying, running a Bitcoin mining business. People just get in the way. When it comes to, for example, European energy prices, going to your earlier point, I think just looking at the global hash rate distribution shows that Europe is at a significant disadvantage compared to North America, where almost 50% of the hash is. There are certainly pockets of Europe that have competitive energy prices. I assume there are places in Russia that are probably effectively free when it comes to energy. In general, I think the hash price in recent months has made mining without the most efficient miners difficult pretty much anywhere. But still, you have to consider the economic trade-offs between mining and a less efficient miner versus the CapEx to upgrade miners and amortize it over its life. It's not just good enough to be the cheapest producer of Bitcoin when your CapEx to get to that point is out of control. And that's an issue. When people talk about the cost of creating a Bitcoin per miner, a lot of people are not looking at the math on how much CapEx went into getting that particular metric. And if people did the math on that, they may not think it was really worth it to get to that point, especially when the underlying commodity is super volatile. We've liked our experience in Iceland, but it doesn't have the cheapest power prices in the world. But they are competitive and fully renewables. That's great that it's all volcanic and hydropower. And we love the diversification that the jurisdiction brings.
Is there any opportunity? I mean, we've seen it in Sweden and in Norway where mining companies are getting a secondary revenue from the heat that's created from Bitcoin mining. We've seen the likes of domestic homes being heated. We've seen greenhouses being heated.
I heard
We've
things like
seen
shrimp farms and things like that.
we hear all these stories, and I'm not saying
Yeah.
that some of them are not actually making a profit. They're more about the social responsibility that miners are delivering. But is there anything in I mean, Iceland's obviously, I think 60% geothermal energy supporting the country. Is there a requirement out there for that, or could you do anything with the heat transfer?
Look, with respect to whether there are secondary revenue streams from Bitcoin mining, I imagine there are, but it's not something we're focused on. We'd rather focus on revenue streams that are not correlated to Bitcoin at all in order to develop a diversified business. And the R&D required to develop a secondary mining revenue stream is probably not something worth putting mental
Outweighs the
calories.
benefit. Yeah.
Yeah. Yeah.
Yeah, that was my panel, Sam, and I was going to say, is the juice worth the squeeze on that one? It is a bit of a question mark. Hey, we've covered a lot of ground today. Obviously, the focal point was that big M&A activity, not only acquiring that tier 3 data center, but also that impressive pipeline that really sets Bit Digital up for the future. Sam, you've been talking or hinting about this for months and months. You were able to deliver, sign the contract. Thank you for making the time to talk to us today. Give us some more details. I'll give it back to you for any closing thoughts, but congratulations from both Anthony and myself.
I appreciate the patience that shareholders have with us, and I can assure you that we're working extremely hard to produce alpha and value and not just sit on, just not show up to our offices and hoping that Bitcoin goes up. That's not the way we're running the business. We're running the business to make sure that the value of our company goes up based on our efforts and not the unpredictable volatility of a commodity that we don't control.
Excellent. Well, there you have it, you guys. Leave a comment in the section below. Let us know if you're holding Bit Digital, what you thought of this week's news. As always, hit the like button. Feel free to subscribe. Sam, you know where to find us. We'll be here listening and watching for the next piece of news. Keep up the great work and talk soon.